We are ready to assess the impact on agriculture of the US trade deals and yet the weather in South America and the United States. Mike Zuzolo is right here on Connected Farmer, your channel to keep you up to date with the latest trends in agriculture and livestock. So this is the global ag trade brick by brick. We have Mike Zuzolo. The ones that are not subscribed yet, please subscribe. And we are going to start with the hottest issue is that on our last video we talked about China and we haven't commented yet about the tariffs now going down to 10% reciprocally between the US and China. How do you see that might?
Well, I see it as something that was necessary for both parties at this point, Luis, because I don't think on the US's side we had gotten enough trade deals with our other major Asian trading partners like Japan and South Korea, somewhat due to politics, South Korea themselves. So they really don't want a trade deal until after the next presidential election in early June. We've had some real issues there politically with the former president being held up in the palace, several months ago, and then him finally resigning. And so that's part of the intricacies of getting trade deals done. It's always harder than it sounds. They're always more complicated than they seem, especially these types of trade deals that President Trump's working on. In the case of Japan, they are really stuck with the automotive side of the equation, and that is such a big part of their economy domestically. This is going to be a very big sticking point with steel and autos. So, getting back to China, I think the United States wanted to give China a door to be able to negotiate through. China took that very quickly, and it made sense that they did because their economy is not improving. It's stabilized in some areas, but new statistics that just came out from the Chinese customs office would continue to suggest while they're leveling off in industrial production, leveling off and keeping a positive retail sales number, they're not recovering. And when you look at the actual manufacturing data, and then you combine it with property data, they're actually still weakening in some areas, property especially. And this then begs the question to, okay, if we've got this pause by the US and China, and factories should rev up really aggressively now on both sides, shipping should really take off on both sides for the next 60 to 80 days to get everything in as fast as possible for the next 90 days. Why then would China's central bank once again lower their reserve requirement like they did on Tuesday night, Monday night, Tuesday morning? And I think this is another indication they still have too weak of an economy. So I'm still just as nervous as I was about China economically as I was 3 months ago before February and these big tariffs hit.
And my guess is that many countries are waiting to see what the other players are doing. Like in the case of Japan, I saw a statement from an official there saying that they were first not accepting any type of tariff that would go down to zero, but now that China has made a move and an agreement with the US, they are open for some products that will have zero tariff coming out of the United States. Now, my question to you is, the UK is a very different country than most countries in the world. It was an easier deal, but do you see any other country signing up deals that would guarantee more purchases of US agricultural products?
I do, and to follow up on your excellent point about Japan, the trade negotiator, the main guy for Japan's coming over for a third time this Friday to Washington D.C. to sit down with the USTR. I tell you, Louise, since President Trump returned from his Middle East trip, I think a lot of the clouds parted for me as to whether I was on the right track with his foreign policy, economic policy, trade policy, essentially being one and the same, and that it was the epicenter and focus of it was on China. You bring up the UK. There are certain parts of the UK US trade agreement that specifically would create an environment where China was not going to be able to participate in some of the key traded goods that they want to get into the UK. China has made that very known in public about how unhappy they were with some of the clauses in the US UK trade agreement. And when President Trump came back from the Middle East, it was very clear that he wanted to keep Chinese advanced artificial intelligence and technology and essentially the electronic Belt and Road Initiative. And this is where the brick by brick, the title that you and I use on this video is very, very real. I think that the U.S. administration really wants to keep China out of certain areas, whether it's technology related or whether it's geographically related. And I think in the Middle East, it's both. And so I think this is where I will stick with my original analysis from right after the president won election. And after reading Kevin Hassett's book and after reading Robert Lighthizer book and looking at Stephen Mirren's policy paper from November of last year, I really do think that China is the Japan of the 21st century, that we are essentially taking a playbook page out of 1985 with Japan, who was also exporting to the point where it was damaging our trade relationship, hurting our deficit. Our credit rating now has been downgraded. There's a lot of wheels in motion now that make a lot more sense than they did 6 months ago.
Now, shifting to South America, there were some updates when it comes to the production, both in Brazil and Argentina, but you still wouldn't change your numbers, right?
I would not. And in fact, honing in on Brazil, over my left shoulder is a drought severity map of Mato Grosso, and most of it is in deep red and orange as far as drought potential heading into the next few days. And if they don't get relief and these temperatures warm up like they seasonally do, I can't see that USDA's 4 million metric ton increase from that report you're referencing on Brazilian corn production, specifically because of Safrina getting off to such a good start, cannot be walked back. I think they're going to have to walk some of that, if not all of that, back in terms of that Brazilian corn production. Argentina, another key player now. I didn't have any major qualms with USDA on their Argentina numbers, especially in the corn. But this flooding situation really changes the dynamic. And I'd love to, since my subscribers and clients really enjoy watching this video that you put out, I'd love to hear what you have to say about that as well.
Yes, well, there's a huge disparity between the regions in Brazil, and I wouldn't trust any projection that is on the high side.
Yeah, I am, like I said before, I am fine with normal yields right now, but USDA's got in Brazil yields jacked up at near or at records on a record high acreage base too. And that's just doesn't tend to work when you have these kind of extreme weather events. So I'm going to maintain about a 5 to 6 million metric ton less Brazilian crop in corn. I'm not going to fight Argentina's numbers yet, but I would say one of the big things that I've seen this week, and one of the reasons I think that we haven't seen this weather in Argentina play out in the meal market as the number one meal exporter in the world, why hasn't the meal with so many net shorts and funds done what the wheat's done this week? And I think it goes back to the poultry issue in Brazil. I'm getting a lot of sensitivity in the trade colleagues that I talk to, that this poultry issue in Brazil with China and EU and South Africa banning poultry and in some cases actual meat, not just live animals. It's a situation where there's a lot of people now worried about the overall global feed demand, and I think meal is included in that.
And that right now is a downside for corn, at least in the Brazilian market.
I think you're right, but I think it's also an upside in terms of the Argentine numbers because you had put out to me, I think it was last night, you had said that corn, from what you could tell from your colleagues down there, had only been 40% harvested in Argentina. And I don't even know if that kind of rainfall, and even though corn is taller than soybeans, whether you could even get to feed quality. I'm worried about the vomitoxin, aflatoxin issues that corn may have now if they didn't spray fungicide aggressively. So I think there's a lot to be said for the idea that the corn demand could be made up pretty easily by cattle and hog feeding and other areas of poultry feeding. But it's very simple. The trades looked at it and said, this is tough for feed grains, but it's a boon for the livestock futures, especially the cattle, and especially given that screwworm issue and closing the border between the U.S. and Mexico.
So previously we have said that the month of May would be key for specifically for the corn markets because of the trade war between the United States and China. But right now, with all these factors impacting the market, everything seems to be upside down, right?
Well, except for the wheat. We always talk about the wheat when we talk about the corn, and we always talk about wheat as being a key indicator in the commodity sector, along with crude oil, especially with the trade. And this week, wheat has done what it's needed to do since the May futures has gone off the board. And we've got enough hot spots in the northern hemisphere, not just our own country here, but especially in China's wheat plain and also in Russia's wheat plain, and to a lesser degree, Ukraine's corn and wheat plain. We've got an issue with production potential, and I noticed end users are coming off of the fence and buying more wheat now globally. And our exports have picked up here in the United States as well the last couple, 3 weeks. So I do think, Louise, we're seeing a movement on the dial between the currency staying weak here, the US dollar staying weak, and the Chinese currency and Brazilian currency staying relatively strong. And then these weather hotspots being taken notice of. I think the grains, especially, are coming around pretty nicely and not having to deal with some of the negativity that maybe some of the other commodities like cotton and like crude oil prices have had to deal with recently.
And what do you see as concerns in the U.S. Midwest as far as weather goes?
Yeah, the biggest concern I would put is the drought is relieved in the Corn Belt for now, in the Western Corn Belt. We still have a drought though in the hard red wheat belt. And so wheat's still my leader in the US, Russia, and China makes it the global leader because of our tight world stocks. I would say that the central and eastern corn belt farmers that I work with are very nervous about not getting their beans planted at this point, and to a lesser degree, their corn planted because we are running into the second half of May now, and they keep getting more rain, and it's cooling off now as far as the next 6 to 10 day forecast. So I don't think that we have as ideal planting as the USDA crop numbers suggest as of even just this past week. So that's something to keep an eye on. But I would put ahead of even that the issue of what's going on in Argentina and Brazil, because the market, I think, has baked into prices that there are no supply issues at all coming out of South America, that the crops are there, and we've got big competition ahead this summer in the United States because of all these supplies in South America. So I'm really turning the spotlight back on Brazil and now Argentina.
All right, sir. Thank you very much.
Thanks, Louise.